All right, I'm gonna get started. There's a 25-second delay if you're watching this on, and I'm gonna upload this to YouTube also. But I'm just gonna practice trying to explain what options are. All right. Okay, and I'm gonna do an example on the two stocks that I probably made the most money on options. Is Amazon and Tesla. But I made the most money percentage wise on the AMC puts. But I wanted to show you on a typical trade that I usually do. And you can use $500 collateral at a time. Okay, that's what I typically do because the spread on Amazon and Teslas are $5 spread. So I want to tell you, I don't want to tell you terms that you don't understand, so I'm going to try to break it down. So essentially what I want to do is make a play right on Amazon. Let's do an example on Amazon here. Okay, and you can play options without having to own the stock. And on this, I recommend if you do want to do this and eventually learn it, open a TD Ameritrade account, right? And get apply for options level 2 or 3. I don't know what it is, but you have to apply to get to trade spreads, option spreads. You want an ability to do that, and then also you want to apply for futures too, because futures does not have a pattern day trade rule. So, but I'm going to do this example, right? How you can make money. All right, I'm going to do a trade, and this is a simulation with real data, right? This is the real data. Okay, what I'm going to do is I'm going to look at the chart on Amazon, and I'm going to see here are the things on the TD Ameritrade on what's going on. Earnings is July 29th, right? What is July 29th? It's Thursday, right? So this is probably a good play on volatility, a volatility play. Yeah, so let's look at the chart here. Okay, Amazon is going to have earnings Thursday. So if we look at the other platform here on Amazon, actually this tells you on the other platform too, but I want to know the expected move, right? Well, Amazon, go to Amazon. That's the symbol there. Add it. There it is right there. Amazon is $3,611 a share, right? But the reason why you want to apply for spreads is that for the people that don't have a lot of capital to work with, so you have to apply for spreads, option spreads. Earnings, here it says on this platform, earnings July 29th, right? So we can play this one, or we can play the 10 days, 3 days out or 10 days out, right? So let's look at both. And let's also look at the chart. And let's look at the history month back. Let's go like 4 months back. All right. And let's go back to see how low it has gone. It's gone down the 35.20 area. Let's see if it goes back any 35.20, 34.20, 3,400. Okay, let's look at the 3400, but let's see what the expected move is. The expected move is 34. See this shaded area in this platform? This is Tastyworks. I would recommend if you want to trade options or start trading, after you learn how to do options and you apply for this and you get this is the best one for options then. But this shaded area and this platform is the expected move, right? For the earning it's by Friday. So I'm gonna go. What I was looking at is 33, 31. See, I'm scoping out on how far I think it might go down. 35. Let's see, 34.20. Yeah, let's do a 34.20 or 3400. Yeah, or it might even go down here. 3300. Let's look at these here. I'm just looking for the bottom. Possibly, I want to look at a possibility of how far it can drop, before people panic and need to buy again, you know what I mean? Or opposite. So 3,300, I'm going down. Okay, this is June. This is a month ago. It was down to 31. So, and this red line is called a VWAP, a value. This is basically the average price people bought the stock at. See, so it's above the average. So that's important too. So what I can do is just 34.20. It looks like it's a good area. Yeah. 33, maybe 33.40. Yeah, 33.20, I believe. Let's see. Let's see what this costs. Let's see what's gonna cost. Yeah, that's not good. Let's go out. So what I want to do is go to the next expiration and see how much it's gonna pay. $166 profit. Let's go a little bit in to increase it. See, what I'm looking for is probably 25%. This is going to be 25% of this. So let's see what 25% of 1800 is. That's my target, about 25% profit on a trade. So we're going to go down until we get near 400. So we're going to go down. See, this platform lets you go down. It's cool. Yeah, let's see here. $160. Let's see what the percentage of that is. 166 divided by 830. That's 20. So let's go down one more. 172 divided by 8228. That's still 20%. Let's go down one more. Just get closer. 176 divided by 830. That's 21%. That's good. That's good enough. Okay, what I'm going to do is make a bet that Amazon is not going to go below 34.15, right? And this bet requires $500 collateral minus your credit, so I'm going to get 180. So let's do it on the simulator. Actually, see how much it's fluctuating? So I'm going to do this bet on the simulator here on Amazon, right? So I'm gonna on this other one, I'm gonna go to this August 16th strike. And I'm gonna go to 34.15 right here. I'm gonna sell the 34.15, right? Yeah. That one I want to sell. I want to sell the 34.15, and you left click, right? And then to do two trades at once, to do a spread, I want to buy the 34.10. So you control and then left click. You just have a spread, $85. Let's see what the current price is. That's about right, yeah. Okay, so the spread is 500. So I want to make a, let's see, I think I want to make like a $5,000 trade here. That's about right, yeah. So it's sell 10, right? So this is going to be require it requires 5,000 collateral, but we're gonna get back about $5,000 collateral, but we're gonna get back $500 of potential profit. So what I'm gonna do is do the bet now. Ooh, it's going up. Let's see if we can get dollar. Because we want to, what we did, the concept is we want to selling short. It's similar to that type of theory, but ooh, look at it's going up. Let's try to get to 101. Okay, I'm gonna sell 10 34.10s. No, 34.15s. 34.15. I'm gonna sell those and buy these to cover. Okay. Okay, this is gonna be, let's see what the prices is gonna be on this. Let's see if we can get a dollar. Oh, it went down to 80. Let's try to get 90 just to be safe. Let's try to get this 90. Yeah. Let's get it. 90 times $900. Let's see if we can get $900 right there. With $4,000 collateral. So typically, though we round, we're gonna get a 30, about 3,100 collateral. Let's see if we get it. We got it. Let's see what we got it for. We got it for 90. Cool, that's right. And the price is about 90. Okay, so what I did is I making a bet, right? That by August 6th, the price of Amazon is going to stay above 34.15 per share, right? And for that, I collected called a premium, or the money up front. I already collected my potential profit already. Let's see what it is. I collected $90 times, so $900. It went right back into my account, right? I can spend it if I want, right? But we have to make sure the stock stays above 34.15. And based on statistics, if we go out of the money here, we have an 80% chance, right? According to the current odds, it's sort of like horse racing odds, where people bet on certain things and the odds go up and down. Right now, the odds are 80% chance that this is going to be a winner, right? So now I'm going to wait until earnings, and this will skyrocket up or go down. It doesn't matter, but Um, that's what we do. That's all we want to do is we have to enable spreads on your account when you open an account to do this. Because if you're just to sell this, you would have to put up. Let's see what we have to put up. 50. We have to put up 53 grand in collateral to do this by itself. So we need to do spreads. So we put up 53 grand to make 2,600. Now what's 2,600 divided by 53, 8, 53, let's say 800. It's just round up, down. So that's only about 5% return. But that's good. You can get 5% return in 1 week. But that's too much collateral to put up. So we buy this, drops it down to 400. And then I got 10 of them. Anyways, that's the concept. That's the concept, right? And it's still a lot to explain, but that's the basic concept. I'm going to do another one on Tesla, right? Okay, we have that play in our virtual account here. See Amazon, it's like nothing. See 5,000 collateral right there. See, we're just broke even. We're not making any money because we just made the trade. So the next bet is on Tesla. The Tesla, I want to look at the chart and see. I want to look at if there's any upcoming earnings. Tesla. Let's see if there's any earnings. There's no upcoming earnings on Tesla. So let's look at the chart. Okay, and what I like to do is make a play. Either way, you can make a bet that it's not going to go above a price or it's not going to go below a price. So, but what I do is I look at the chart way back, 6 months, 5 months, and I look at the bottom, right? I look at the bottom or the tops of that period. So I'm going to go down to see, and I look at the red line too. That's a VWAP. It's called VWAP, some value added price. Anyways, it's good. This is a good indication on whether the stock's going to go below that or not. So I'm going to go back further and see what we can see the bottom at. Hit bottom 627. Let's go back further, see if it's got any. So there's 598. So let's say 600 there. 590. 550. I think 550 is a good, 550 is a good level where I think it's never going to go down to 550 within the next week or so. So let's see what 550 down here. $12. No. So let's go. I want to go to the next expiration, August 6th, and see what it pays. 50 bucks for 1,000. That's not worth it. So this is 10 days out. So I'm just going to go closer to the current price, and the credit is going to get larger and larger. And I'm looking at 20 to 25%. I'm going to keep going down. And I'm keeping in mind different things too. I'm keeping in mind different things. That this thing has already gone down. You think it's not going to go down any further? I think it's not going to go down another 120 points. So I think this is a good bet. So let's see what this is. 80. Let's do the math here. Let's say 75 divided by 423, 17. So let's go down one more. 87, 413. That's it. I'm going to do this one. So what I'm going to do is make another bet that it's not going to go below a price. That Tesla by August 6th is not going to go below 590, right? So that's what I'm gonna do. I'm gonna do the bet on similar now. Tesla, not Tesla. Tesla. Here's Tesla. Earnings. See, they already had earnings yesterday, so I think it's not going to go any further down. So I think this is a good bet. I'm going to do the bet. I'm going to sell the 590, buy the 585, August 6th. So I'm going to go to option trade, go to August 6th, and I want to sell the put side, sell the 590. Right here. Sell that, and then you shift and click on the buy on the 585. You get 92. Let's see if it's 90. Yeah, it's about right. Okay, and then these are $5 spreads, so it's $500 per contract collateral. I'm going to do 10 again and see what the collateral is. I always, about 5 grand, I want collateral. This is pretty good for 4 grand. Minus 900, so it's only like 3 grand collateral. So let's do it, man. See what happens. Yeah, it didn't take, so let's see what it went down to 85, so it's lower price to, it's lower, it's change it and lower our price a couple cents at a time to see if it takes, because we want to get the most money up front if we can, you know what I mean? See, it's still 85, so it's changed, it's go down a little bit. See if we get 87. So it's just every time I put an order, it's going lower and lower, but it's let it brew for a second. We might get 85. Let's see if we can get 85. 86. Yeah, let's just do 1 cent below 84. We got 84. Let's see what we got. Okay, Tesla. So we sold the 590, right? We sold the 590 and bought the 585 spread. We got $85 per contract times, so we got $850 credit back into our account, and we have so the total risk is 5,000, then minus the credit we got. 850. So this is it's not you're not risking 4,000, but that's the total collateral needed to make this trade. So basically it's just round down. Okay, 4,000, let's say 800. So 800, I'm gonna look at the percentage. 800 divided by 4,000, 20%, so that's good. So if this wins, we're going to get about 20% return on the money. And again, the trade is that Tesla is not going to go below 590. It's not going to go. That's my bet, right? But you never know, man. You never know. It might go down, but I think I think I lost one time out of 6, 7 times on this type of bet. But now we just wait, and all we want over time, we want the value of this to go to zero, right? We can just sit back, do nothing until August 6th, and as long as Tesla stays above 590, the price of Tesla, we don't have to touch anything or do nothing. Let it expire worthless. We're gonna collect that $850 profit on $4,000 collateral, right? We're gonna collect 20% for doing this one trade, letting $4,000 work for us, and we're gonna make $800 profit. What? How many clicks was that? All right, so I know this is a little bit complicated because you still have to learn what a spread is and what I'm selling and buying and all that. But just in general, I want Tesla to stay. I want Tesla to stay above $590 a share. As long as it stays at, I'm gonna make $800 profit. Okay, no matter what. And on the Amazon play, all I have to in the same day by August 6th, Amazon needs to stay. The price of Amazon needs to stay above $3,415, and that, if it does, I will collect $900 profit. I just do nothing, just not look at this, do it on my phone, make sure that, hey, is Amazon still above still above $3,415? Yeah, okay, I'm not, no sweat. And I look at my phone. Hey, is Tesla still above $590? That's all I have to worry about. I don't care about if it goes down to. I don't care. I mean, I do care if Tesla goes down. You know, if it goes way down there, right? But that's all. That's all there is, man. Just wait. Just have money work for you, like. And then on my other trades is if you own shares. Yeah, like I'll even buy shares. I mean, this virtual account has $100,000 on it. So, what I can do is Tesla shares are cheaper. So what I'm going to do is buy some Tesla shares and sell calls against it. I'm going to buy Tesla shares. Oh, that's too much, Joe. Let's see how much. I don't have that. I'm gonna do it like a realistic play, right? What I would normally do, right? That's too much. So let's go. See if we can buy 9 shares. Nine shares is not to buy 8 shares. Shit. Okay, this is a normal. No, that's too much. I have to buy 8. 8 shares. Okay, that's the typical bet that I would do. Okay, so let's do this. Buy 8 shares of Tesla. Bam. Okay, 8 shares. I got it at 634.50. Okay, now it's Just wait. Actually, I just buy the shares and have the options. So so either way, if it goes, yeah, this is double dipping. I bought 8 shares and I had collected a Tesla. Yeah, I collected 850 and I bought. So for the money that I collected, bought. Um, I collected 850 and I bought um, 8 shares, so it cost me less, $850 less to buy them. So I'm just gonna wait, see what happens. That's an example of how this is not really an example of how it works, but it's just the basic example. All I want is for the price of the stock to stay above a certain price. That was it. Ciao. Till next time. I'm still following up on these trades here. If they're losing now, but if they're not going to lose very long, because we still have a few days to go. I mean, like we have a month to go, but I think earnings on this is, what's the earnings on me? A AMTX, that's the one I want. AMTX. The earnings is August 12th. Okay. So we have like 2 weeks out for the earnings on that. So that's basically my the video. I don't know how long it's been. All right, thanks. Bye.